Welcome to Legally Speaking with me, Tarun Nangia. The Insurance Development Regulatory Authority of India has taken a decision to do away with caps on commission that insurance companies can pay to its intermediaries. It is a long-awaited demand and a very important step. Why is this important? What are the implications of such a decision on the insurance companies in India? And the overall insurance ecosystem is what we're going to discuss today, because India still remains a country which is one of the most underinsured in the world. And in a country where the per capita income is about $2,700, which is not that rich, or rather we can call much less than middle income countries also, insurance is a lifesaver. It saves lives in the times of health problems, in times of when somebody passes away. We're going to get all those factors in. I have a very eminent panel joining me. Let me welcome S. Ravi. As you all know, he heads and has founded Ravi Rajan and Company. He also served as the head of the Bombay Stock Exchange. But most importantly, he also serves on the board of directors of two big insurance companies in this country, Star Union Daiichi and Aditya Birla Health Insurance. Good to see you again, and looking forward to some very interesting insights from you. I have also with me somebody who has advised insurance companies for the past 18 years. I have with me Jaspreet Bedi, who's a partner with Nangia and Company. Good to see you, Jaspreet. You join us for the first time on this program, and looking forward to some insights from you as well.
Sure.
At the outset, may I request S. Ravi that in the first 3 to 4 minutes, if you could give a background, lay the ground, and explain these things before we move ahead. Over to you.
So, first of all, Tarun, thank you for inviting me to the show, and I'm happy to be here. So this guideline, there were a lot of issues and ambiguity that were there in the insurance industry, especially pertaining to distribution. And there was a pushback from the industry. And you would remember, about 3 months back or 4 months back, there were issues on GST also. And there were issues on that side. So there was a lot of talk about having clear-cut guidelines, giving distribution a more liberal environment, and also to see that the guidelines are more broad-based and it can penetrate the market deeper. With that perspective, these guidelines were brought in by IRDA, which is a great step. I would say it is a game changer in many ways. If you can compare it like the 1992 liberalization, I would say this is one step for the insurance company which is going to go into, take this insurance sector to new heights, and it will really increase the penetration. There were a lot of ambiguity on distribution because distribution, had various people had various interpretations, and there were issues around it. And that actually, IRDA, if you look at the last 5 years or 6 years, the rules and regulations that were being framed, even a product needed to be approved. Every product needed to be approved by IRDA. So what has happened is, through these guidelines, they have broad-based governance and the regulatory aspect, taking it away from rule-bound regulation into principle-based regulation, which gives a lot of leverage to the insurance companies. But there is a lot of accountability on the insurance company, the management and the board. If you see the guideline itself, it is put the onus onto the management and the board, and the insurance company. What it means is that you can devise your own product, which should be in the interest of the investor or the person who takes the insurance. So it is the duty of the insurance company to see that the investor interest is protected, and that too through self-regulation with broad principles that are laid down by IRDA. So what it means is, very simply, you have an upper cap, which you have the expenses. There is an overall cap on the expenses, and that is also very clearly prescribed. And you can do whatever within that cap. And that is what is very important, because the upper cap is there. Within that cap, you can do anything. So what it gives is a depth in the distribution, where you can improve on the distribution. You can increase the quantum of money that you spend on distribution. commission on distribution, and yet you have an upper cap where you have to curtail everything, and yet the board and the management is accountable. Product wise also you can work it out, because see what was happening in the past, every product was getting approved by IRDA. Now it is not like that. Now what has happened, it's a principle based. You have basic principles that are laid out, and you can launch a product based on that. So it is actually making the whole insurance sector very liberal, but with strong governance and self-accountability. And that is the key to this whole new guideline. That is my perspective of the whole.
So strong governance and self-accountability is the words that you shared.
Yeah.
I'll take this to Jaspreet Bedi from Nangia and Company. Jaspreet, you have been advising insurance companies for many years now. Could you please give us a lowdown on this whole issue from inception?
Sure. So, Mr. S. Ravi has summarized the entire new regulation on payment of commission to ED agents, whereby the removal of cap has been, of course, done by the IRDAI. Now, if you look at it, as rightly said, there were a lot of ambiguity previously, and this was a much major and a long-awaited reform in the insurance sector. And if you, as summarized earlier also by Mr. Ravi, that this supports the government vision of improving the penetration of insurance in the country. Now, additionally, what happens that it also gives the flexibility to the insurers, how much amount of commission they want to pay to which of the agents and the intermediaries. Now, what happens that once this comes into play with effect from 1st of April 2023, the intermediaries would have a better negotiation powers with the insurance companies, and they can penetrate better in the country. Additionally, what would happen, because of the increased competition that would be there, because the insurance companies will be launching new products basis these guidelines, and the competition will increase, the insurance companies will give appealing policies to the customers, and the better pricing would ultimately go to the customers. So, and if you look at the entire insurance industry in India, it's very, very meagerly penetrated. Around 4%, approx 4% is the penetration of the insurance in the Indian economy. If you look at the entire numbers, Indian gross written premium would be around $120 billion as compared to US, which is around $2,700 billion. India now stands at around 10th or 12th in the list. But with this, the more penetration would happen. And if I was reading a recent report by one of the big reinsurers that India would become the 6th largest insurance industry in the world. So all these reforms are a step towards the major, what I would say, Mr. Modi suggested, Amrit Kal, whereby we will have a robust financial services sector along with a very tech-driven and a knowledge-based economy. So, of course, this is a welcome new move. A lot of insurance companies are considering it as in a positive way. There was a lot of ambiguity in terms of spending that used to happen earlier. Earlier also the money was being spent. The insurance companies were acquiring the insurance business through sales through a marketing route. Now it has been clarified that they will acquire new business through giving more commissions. You're on
point very well taken. I'll take this to Mr. S. Ravi. We got a sense from insurance company CEOs who went out and said that insurance, in a sense, intermediaries, which are agents who actually go, the last mile connectivity they provide to the common people, they will now be more interested in selling insurance, and hence penetration will improve. What do you see happening? Because the CEOs of these companies appear very positive. Do you think the insurance penetration will indeed get impacted because of this single decision?
I completely agree with the various company CEOs, Tarun.
Yes. I'm asking this to
So, frankly, yes, it will really impact it will really increase the reach, first of all. Second, as clearly articulated by Jaspreet also. Basic problem was the distributors would not work for such a low amount of money, because there is a cost of distribution also. Because there will be distributors, there will be sub-distributors, and creating a distribution network across the country is a big challenge. Now, the distribution companies, especially those who have tech-backed distribution companies, are going to really gain out of it. And the distributors, in a way, can really demand their pound of flesh, so to say. And the CEOs will have to use these distribution companies in the right form. Suppose they want to increase the penetration in certain areas, certain geographies, then they can actually pay a higher cost for that. So the cost is not, you can have a discrimination amongst the cost also, of the expense also, which was not there. So, and we had the GST problem also apart from that, where you are aware, 4 months ago in the month of December, the GST had issued notices to all the insurance companies on distribution for GST. So this will set rest this whole question of distribution, its expenses, its accountability, and also, as you stated, the increase in reach. Because we can focus on which region and which geography we want to sort of emphasize, get more business from. So maybe even tier 3 cities will also increase insurance, because we are underinsured. And I think that is the key to the whole, the concept behind this whole move.
Okay, point well taken. I'll take this to Jaspreet. Jaspreet, can you explain to us, Mr. S. Ravi made a very important point where he said that these intermediaries have some people who they contract this work to. So actually, the company may be interacting with one person, but they have many other associates. They also have to be paid. So money has to be paid to each of them. Can you explain how this benefit travels and why there'll be more penetration because of this decision? Why more people will be able to avail insurance? Also, because many people in this country were real skeptical about insurance. Suddenly, we see this new awareness among Indians to get insurance. Can you explain why this will benefit and how this will benefit?
See, if you look at the pre-pandemic and the post-pandemic, of course, the insurance penetration has increased. Post-pandemic, there was a huge surge in the health insurance policies being bought by a lot of individuals. And as Mr. S. Ravi explained, that the penetration is pretty low for the micro insurance sector products. What are micro insurance products? Those are the products basically for the economically backward and vulnerable sector of the country. Now, what happens, since the premiums are low for the micro insurance products, the percentage of commission which is paid is also low. So if you are removing the cap on the percentage of commission which is paid, the distributors who are getting hurt by selling those products will be able to sell more. Now, along with the removal of cap, IRDA has linked the insurance commission with the expenses of management, that they can give the commission up to the expenses of management. Additionally, what they have done, they have also changed the limits in some of the cases for the expenses of management, whereby now they are allowing additional 2.5% as an allowable expense for renewal premium. Earlier it was 15%, now it is 17.5%. It will contribute significantly. In India, if we look at the entire life insurance business is around 7 lakh crore, and out of which the renewal premium is around 3.5 lakh crore. Even a 2.5% on that will be a huge chunk which will be available for distribution to the intermediaries. Now, this will provide a lot of impetus and a lot of basically energy to the distribution companies to actually distribute the micro insurance products. And if we look into India, majority of our population live in the rural areas. Till now, 65% of our population live in the rural areas. Additionally, what this new regulation has done, it has also allowed additional expenses for rural and social awareness programs, insurance awareness programs, insurance tech expenses. Now, because of all this overall limit being available for the purpose of distribution to the intermediaries and agents, they will have more inclination to sell the micro insurance products, which has a limit, which earlier had a limit or a capping on the commission rates. Now there is no capping. So it's now an overall limit. So the micro insurance products will be penetrated more. Distributors will be happy to take on the for distribution of the micro insurance products.
Okay. You made a point on micro insurance products. Very interesting. I'll take this to Mr. S. Ravi. 2-3 points. In the recent years, we saw very innovative and different products. You had an insurance on mobile phones. You have a very instant insurance on travel that you take, when people, earlier it was when people were going abroad, but even now in inner country trips, when you're traveling from one city to another, there is an insurance at sometimes a small fee as little as 249 rupees. So in a sense, this sector has, in a sense, gained a lot of traction in the past few years. Do you think that now the forces have been unleashed? Now the government, of course, doesn't have the capability to every village and get people insured. The private sector has that capability. Do you think it also generates employment? This single move will be an employment generator for a lot of youth, having more agents? Could you reflect on the employability and the employment part because of this decision?
So, Tarun, answering your question, yes, it will really help in employment, especially considering the fact that distribution at tier 3, tier 4 type of cities, smaller villages, smart cities, is far lower than the penetration in the metros. The awareness, as Jaspreet said, the awareness is also not there amongst people for insurance. So what happens is, not only do we give employment to people who are there, but also create insurance awareness and literacy. So both will happen together. And this will actually, the word used by you, unleash, actually this will go to a new zone. Insurance will go to the new zone. And you will see it. In this 23, we are in 23. In 25, if everything succeeds, this industry is going to grow by about 40 to 50%. I'm very clear about it because the reach, it's an under-penetrated market with people having no interest or very little interest, having very little literacy about it, and people who will get employed here will also start propagating this schemes here at multiple places. And that is what is very important. If you look at the trend nowadays or the current trend, the insurance was sold through a thing called as banca. That means through banca, it means through banking channels. Now what will happen, you will see the banking channels also propagating this, but also hardcore single distributors also doing it. You also mentioned about travel insurance. So monoline companies also will get licenses. For example, I'm reading about it. One of the motor insurance is going to be a very important thing. One company has announced that it may look into that. So monoline also will start. That means in all forms of, in all the universe of insurance, means we will be there. So as the licenses go, and even there is a concept of universal licensing, which IRD has introduced as a concept paper about 4 months ago, that will also come into play. So all this together will really make insurance a very vibrant sector, which will provide a lot of employment.
So insurance is going to this, the horses of the sector are going to be unleashed due to this one decision of Irdai. Sometimes they say that small decisions, when bureaucrats put pen to paper, can have a huge impact on the economy. I think this is one such decision. I'll go to Jaspreet Bedi for his input on the employment and the employability front due to this decision.
See, the moment you have unleashed and removed the cap on the commissions, what would happen? The distribution-led business will also attract investments. Okay. Because now there is no capping. Now the distributors or the intermediaries would be in a better position to negotiate with the insurance companies. So ultimately, a lot of distribution-led companies can also grow, along with, of course, the penetration by the insurance companies. That, of course, the employability will increase. At the moment you give empowerment to both the parties to negotiate, what is the pricing at which the insurance company will acquire the new customer. So empowerment has now come. Earlier, of course, there were restrictions, caps, and a lot of regulations in prohibiting these. So the sector will open up. The distribution sector will open up. And the distribution-led businesses will open up. And of course, the employability will increase in the distribution-led sector also.
Okay, point well taken. Now I'll go to Mr. S. Ravi, sir. As you yourself are on the board of two big, large insurance companies of India, you have seen this sector growing since inception. From the times when we only had the New India Assurance Company as the principal insurer. There were many others, but that was a de facto company. Then we saw the growth of Bajaj Finance. In fact, I would like to share a personal anecdote. I wanted to interview Rajiv Bajaj in 2009. I knew Rahul Bajaj well, so I called him that, could you connect me? I have interviewed you, Mr. Rahul Bajaj, many times. Could you connect me to Rajiv? He told me in Hindi कि बेटा राजीव को तो हर कोई इंटरव्यू करना चाहता है, आप संजीव को इंटरव्यू करो, वो अभी बजाज फाइनेंस शुरू किया है, आपको नहीं पता कितना ग्रो करने वाला है वो. And that time I thought that he was just saying it in jest, but even I couldn't realize what kind of growth, because that time Bajaj Finance was unknown. So we have all witnessed the growth of insurance, and of course you being much older have. Will the future growth in the sector will be much more than what we have seen, or it will be incremental from now, or nothing is seen as yet?
So there is going to be a significant growth. As I said, in the next 2 years, I see an increase of 40 to 50% in the whole industry growth itself. That's the first point. And the second point that I want to make is people who have established players with marginal costing will increase their size of penetration. So there will be a little bit of struggle for the startups, because startup companies, because with marginal costing, they are going to increase the size very easily because they have the capacity and the capability and the capital and the solvency behind it. Whereas a new company will struggle with this because they cannot put too much to distribution. So that will be the challenge which new companies will have. But the established companies will see that they will get more depth, they will increase their size. And like you saw it in the banking sector, the smaller banks got absorbed with the bigger banks. I see a future in the next 5 years, this will happen. Those who have capital, those who have growth, those who have established themselves, those who are on the right side of governance, they are going to really deepen the market and the size will increase. But I also see that some of the companies will merge together and you will see a lot of churn in the next 3 to 4 years. And we have seen already IPOs coming in and all that. And you will see a big churn that will happen in the industry itself.
Thanks so much for sharing your views here. In fact, India's insurance sector was unleashed when the FDI caps got removed. We got so much of foreign investment. Now this is the second windfall when insurance penetration was deepened, because in India with very little money, people are ready to work. They need sustenance. Insurance will provide what we call self-employment to millions of Indians. It's a very positive note that IRDAI has taken this decision. I would really thank them in that sense for unleashing the animal spirits of India Inc. and also for helping millions of Indians accessing insurance, which should be a basic right for most, because as I mentioned at the start of the show, we're still a $2,700 per capita GDP country. I'd like to thank so much Jaspreet and Mr. S. Ravi who could make time and join us. Pleasure to have you now and looking forward to see you on the next show soon. Thank you so very much.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.